Good morning, everyone, and welcome to the VI SBDC's hosting of Beginner Financials for Entrepreneurs in the USVI. This session will give an introduction to managing small business financials. Today's lead presenter is VI SBDC State Director, John Morosco. Allow me to formally introduce him. Before returning to the Virgin Islands as the VI SBDC State Director, John had many years working as a certified business advisor in Iowa, Washington State, and the Virgin Islands. In addition to those years with the SBDC, John has been a successful business owner, college professor, and nursing home administrator. He has also worked in corporate America for more than 35 years. John spent most of his career working his primary job and teaching at many colleges nationwide. John has an extensive experience managing restaurants, hotels, assisted living, and nursing facilities. He also assisted with his family restaurant and owned a college consulting business and a janitorial business, which he later sold. John holds a Bachelor of Science degree in hotel management and tourism from Florida International University and a Master of Public Administration degree in long-term care from the University of New Haven. Here's a friendly reminder to put your questions in the chat. They will be addressed during the question and answer segment. So at any point during this presentation, just go ahead to the chat, put your question in there, and it will be addressed later on. A copy of this presentation will be available in the post-survey email you will receive after this live session. So we encourage you after this session to fill out that survey and let us know how we are doing. So without further ado, State Director John Morosco, the floor is yours.
Thank you so much. It's a pleasure to be here today and talking about financial work. It's one of my favorite areas in business. It didn't start out that way, but as far as a business owner, learning how to handle the financials, I learned a lot of lessons that go with it. So again, I'm John Morosco, State Director for the Small Business Development Centers. What we're looking at, the objective is learning essentials to the financial concepts for business success, understanding key financial statements, there are three of them we're going to talk about, and building financial strategies for growth. During this session, I really encourage everybody be gentle on yourselves. If you don't know something or if you don't understand it, we're here to help you. We have advisors here that will assist you, and there's no charge for what we do. So during this time, we have many different levels, I'm sure, within this group. Some people know a little bit more, some may just be beginning. The most important part is to hear what the financial and the basis is that you need to really run your business and understand the financials. So many people, I don't know if you've heard, I've heard for years, somebody will come in and say, I don't understand it. It said I made money, but I can't pay my bills. Well, there's a reason, and it will become clear as we go through here. There are different reports that a business owner should be looking at. It's like a three-legged stool. And if you don't look at all three of these financial reports, you're not going to get a true picture of what your business is doing. So as we're going through, I'm going to be talking about why financial literacy is important for the business and the business owner. You really need to understand and track the financials. I know with my first business, I was always so busy, I couldn't do it. And I almost got myself in deep trouble with that. So I encourage, as busy as we are as small business owners, there are ways that you can start tracking and following your financials. It's essential for your growth and to determine how you're going to grow your business. Because I think that's why we're all here. We want to make money. Any small business owner, you love the independence. Personally, I came back to doing what I'm doing, but I miss my small business where I could come and go as I wanted to. Again, I love the SBDC, I love what I'm doing, but I miss that freedom that I had when I was my own business owner. So the goal today is that I really like you to leave with a clear understanding of the basic financial concepts. Again, you're not going to be able to, in some cases, you may not be able to fully understand or fully take in like how to read the financial statements or the strategies to manage the cash flow and the budget effectively. And again, I encourage you, take time to review the videos I'm doing next week. I'm doing an advanced program, which will be much more in depth. But if you're not ready for it, it's okay. And really what I'm encouraging everybody to do is do make an appointment with an SBDC advisor. We do not charge for what we do. And our job is to help coach you through how to get your financials done, how to put them in place. And there are all kinds of tricks that we will talk about. So again, I just keep emphasizing, remember, it's a journey and will take a bit of time to master all of these, everything that we're doing and talking about today. I didn't learn it in one day. It took me probably a year and a half in my business to start to really understand what was going on in the business. But I was patient. I had really good coaches to help me with that. So the discussion as as to why financial literacy is essential in business. It is, again, you want to be able to stay in business. You want to be able to make money on it. So many people, they say, oh, I made $1,000 a month. If you're in business, is that enough for you to live on? Is that what you want to do? How do you want to grow and see your business be a success? Everybody has different concepts. One of the things I talk about with the clients that I have is when we're working on the financials, the first question I start with the client is, how much do you need to make a year? And I can't tell you how many times I got the answer from the client saying, oh, I'd be happy with $1,000 a month. And I would just nicely challenge and say, so you're okay living on $12,000 a year. Can you do that? What's the honest answer? So when we start working on the financials, when you start looking at cash flow, one of the first steps I give to the client is, I want you to, we're going to start with, how much do you want to make a year? And I really ask all of you to think of that. How much do I want to make a year from my business? And are you doing it? Have you mastered it? And if not, are there steps that you can take to build that business up to that level to give you the freedom that I love to see with small business owners? So with that, I do have a video, as long as it starts properly. And this is, I will say, this person that's doing this, I like, he's talking about bookkeeping basics and the difference between bookkeeping and accounting. At the end, he does promote his business, but I still like the content. You don't have, please don't feel that I'm pushing this particular person's business, but I do like what he had to say. So I'm going to run that now.
Bookkeeping is an essential part of small business operations. It plays a significant role in keeping your small business finances organized and is especially helpful come tax time. It's one of the first things you should think about as you get your business up and running. Bookkeeping is the process by which a business records all of their financial transactions. Sounds simple, but it gets complicated fast, depending on the structure of your business and the system you have in place. Learning the basics of bookkeeping can help any small business save time and money. The longer you wait to organize your finances, the harder it is. Bookkeeping is an essential part.
Okay. Sorry, we're starting that again. You hear it now.
It plays a significant role in keeping your small business finances organized and is especially helpful come tax time. It's one of the first things you should think about as you get your business up and running. Bookkeeping.
Sorry about the tech issue, everyone.
process by which a business records all of their financial transactions. Sounds simple, but it gets complicated fast, depending on the structure of your business and the system you have in place. Learning the basics of bookkeeping can help any small business save time and money. The longer you wait to organize your finances, the harder it is to untangle. Here are some of the basics of bookkeeping for beginners. Bookkeeping is vital for small businesses because it keeps accounts, invoices, and expenses organized. Poor bookkeeping can lead to missed payments, late invoices, and a headache when it's time to file your taxes. You can use bookkeeping to help access important documents and records for business operations, facilitate tax information by having business finances readily available, identify transaction mistakes with time for reconciliation and transaction management, to keep your business and personal finances separate from each other, and to monitor your small business's financial health for any changes or improvements. There are 4 bookkeeping basics that you can use to grow your small business. You can use 2 record management systems for your bookkeeping needs: bookkeeping software and spreadsheets. Whatever you decide to use, you need to ensure that you're consistently updating your records. Bookkeeping software allows small businesses to have accurate records. Because of the improved accuracy, you'll save time with how quickly you can complete your bookkeeping. You can configure bookkeeping software to create reports for certain financial aspects of your small business. And similarly, bookkeeping software allows you to have all your records in one place. Spreadsheets offer small businesses a convenient way to save, store, and view large quantities of information. You can use spreadsheets to view data such as customer data, financial data, and product data. For small businesses, spreadsheets might work well for tracking their budgeting and spending habits. You can also use spreadsheets to create financial charts and financial reports too. And finally, you can use spreadsheets to help create invoices and receipts. The second bookkeeping tip for beginners is knowing the differences between bookkeeping and accounting. You may see the 2 terms used together often, but there are notable differences. Bookkeeping involves answering day-to-day financial questions, balancing and maintaining a ledger, entering debits and credits, maintaining expenditures and income, promoting financial statements like the balance sheet, and recording daily transactions. Accounting has different responsibilities, which involve adjusting entries in the ledger, analyzing business costs, completing in-depth budgeting and forecasting, conducting strategic planning, preparing taxes, and providing macro-financial advice. There are 2 types of bookkeeping methods: cash method and accrual method. The cash method is convenient for many small businesses because of its simplicity. With the cash method, you'll record expenses when you pay a bill, and you'll record sales when you receive a payment. This will tell you exactly how much cash you have on hand at any moment. The accrual method is based on the matching principle, matching revenue with expenses. It differs from the cash method in how you track expenses and revenue. With the accrual method, you'll record expenses even though payment has yet to occur, and you'll record sales even though you have yet to receive funds. The accrual method gives you a more holistic account of your financial standing by considering future expenses and revenue in accounts payable and receivable. A business must use the accrual method if it generates more than $25 million in annual gross receipts for 3 preceding years. The final bookkeeping for beginners tip is to learn the basic bookkeeping account types. These accounts serve various purposes that will help you form your balance sheet. Assets describe what a business owns. Current assets include accounts receivable, cash, bank accounts, and cash equivalents, such as marketable securities, money market funds, and treasuries. Other assets for a small business may include financial assets, fixed assets, and intangible assets. Liabilities are what a business owes, like outstanding invoices or business loans. Revenue is the income a business makes from its operations. There are 2 types of revenue: operating revenue and non-operating revenue. Operating revenue is revenue from sales or services, and non-operating revenue is revenue from investments or passive income. And expenses, any outflows necessary to procure, sell, or deliver your products. Bookkeeping is a vital part of any small business. It's also one of the most impactful things that can aid in your small business development. However, busy business owners don't always have the time or know-how needed to effectively manage the books. That's where one-800 Accountant comes in. Our team of expert bookkeepers can support you in your small business by taking care of your bookkeeping. As always, thanks for watching. And if you found this to be educational or informative, helpful or entertaining, please like and
All right. So welcome back, everybody. This was just I like the discussion. What is the difference between, and by the way, thank you for putting up with the tech issues. Sometimes it just doesn't go as expected. And also, we are working out of one space today. Usually we have our own offices. So if you hear additional noises and things, it's just bear with us. It's going to work out just fine. Again, the difference to me, what's important is so many times I hear the professional, somebody that I'm working with, and it was even for me, I don't have time to do this. And it's really working the way on how to get these financials done. A lot of business owners will do them themselves. I'm going to be going over some software that's out there. I'm going to show you a cash flow sheet and also templates for spreadsheets. There are different methods that everybody can use. And for me, what's important is that for my business, my particular story was I was busy. I didn't have time to do my books. What I did was looked at the numbers, looked at what my forecast was, and I hired a bookkeeper. And the bookkeeper kept my books. The key is if you hire a bookkeeper, make sure you understand what they're telling you and that you're still watching your business. One area that I really encourage when we're working with clients is bring in a bookkeeper, have them do the monthly reports. Then I have an accountant that I have do the quarterly reports and all the taxes and everything that goes with it. And we'll have a little bit more discussion with that. What I've added in here is we have, why is that not? Sorry. And there we go. So what we have here is just, I'm showing some different software. I am not promoting any one of these. You have QuickBooks, you have Wave, you have Quicken, Square. Square to me is one of the best operational, that really is a point of sale system, but what Square can do is just amazing. So what I have is, for those that haven't seen it, QuickBooks is, I teach a QuickBooks course and at one of the colleges, and it's a 10-week course and it's huge. So there's a lot of training that goes in if you're going to use QuickBooks. Again, great program. But if you're a real small operation, take a look at Quicken. I use Quicken with my small business all the time. It does all my reports. It's $7 a month, and it does everything I need for my small business. You get to a certain point, yes, QuickBooks is going to be more important, or Wave or any of the others that are out there. But here's some examples that I've pulled, and this is the best accounting software this is from Forbes. This is their vision. I do not have any say, and I do not have any recommendations. I stay neutral on this. That is for the business owners, any of you business owners, to investigate what system you would like to have if you are going to use a bookkeeping system. So these are I'm just showing you the different formats out there that you can use. Accounting Edge, NetSuite, some of these I've used. And they tend to do pretty well overall. So if you want, when you get this update, what you can do is go take a look at some of these, or anybody that has their cell phones ready, just take a picture of this real fast if you would like to investigate, if you want to go into one of these software programs. And there are more. So I just wanted to give you a sample real quick of what is out there. Okay. Then with cash flow is one of the most important sheets. This is an internal document that we use. And please, for people new in finance or doing financials, don't let this intimidate you in any way. Cash flow, when we create a cash flow sheet, what we're looking for we're going to look at revenue, and then we're going to be looking at expenses that you have, cost of goods sold, all the expenses that go with it. And really, when you take this and you have this finished product, you know what the lenders usually look at? See where it says ending cash flow balance? You can have all these figures in here. They want to see what you're anticipating having in the bank, or if you are in operation, how much you have in the bank. The cash flow is going to tell everybody what you are doing. In this case, we use this for forecasting to create business plans that for the client, when the client comes in, we work together, we create this document, and then they're able to put this into their business plan. The lenders really tend to like this program a lot. So I just wanted to show you, again, we have cash flow, and this one line is the most important because it will move along and show what's going on. I have a different sample to show you in a couple of minutes. And then templates. For those that do not want to use the electronic system, this is Microsoft 365. They have all these templates out there that you can adapt for yourself. I have a client that's a really, really small business, and the owner does not like computers at all, which is okay. So what we've done is that we set up the reports to see like the cash flow forecast. Okay, and when we're looking at how to create a balance sheet, these are all things that you need in tracking. You're able to just about do your entire business by pulling some of the proper sheets that, startup costs in this one, planned expenses. So I'm just pointing out, as you're starting up, if you do not go into the electronic system, if you don't have anything, right now, I really encourage, if you have no system at all, this is beginning finance, keep a ledger, keep a notebook that has what is your revenue every day, what are your expenses every day. And from there, if you work, let's say, with an SBDC advisor, we can help you interpret what's going on. But you have to start that. And again, it's important. You're in business, any business within the territory and just about anywhere else, you're responsible to pay taxes. So when you go to pay your taxes, you want to have a document. You need to have documented and show what your revenue and expense and profit and loss really are. When you're, and then if you want to, I've had some clients that came in, we had funding that came in from the federal government, and they wanted to get a grant from that. And the problem was that they had never kept their records, their financial records. So when they wanted to apply for this grant, they couldn't because there was no financial history. There was nothing that they could show to these lenders, to the people doing the grants, what their financial situation really was. If you run a bank statement and from your bank, that's not going to be enough. You have to. There's certain reports that you just have to have. So I'm just giving you an idea. There's something for everybody out there. And that's the point of what I just did on this last section. If we have the basic software, I showed you some examples. And I don't promote any one particular. I know for me, my choice is Quicken because it's simple, it's down and easy to use. But because that's my choice, you have to make a decision what is yours. Understanding your cash flow is important. And then you have all these professional templates that you can use and adapt into your business. So don't be afraid. Get in there, try it. If you download it, I've downloaded some of their templates and I'm going, no, I don't like this one at all. And I went and found one that I did like that's doing the same job. So the other piece is here, really know when to hire an accountant, a bookkeeper, or financial advisor, or visit the SBDC advisor. We don't charge anything. I know I keep promoting that, but it's one of the best resources here on the island. I would say all of our advisors and our staff over here just love working with business. So as we're doing this, key issues when business owner has limited financial history. Again, you're starting out. From my experience, and I've touched on some of this, business owners do not track income and expenses. I can't tell you how many times I'm working with a client. How do you keep track of what you take in, what your income and expenses are for your business? They say, we don't do it. They just look at what they put the money in the bank and then they take it from there. So if not tracking and completing financials, how do you know how much you owe for taxes? You're a licensed business. You've got to pay taxes. I'm not a fan of paying taxes. However, I do it every year and I do it properly because that's part of being a business owner. You have to be responsible. So besides not having the proper tax documentation, if a business owner wants to get funding through lenders or grants, most likely the lack of accurate records will lead to you being denied funding. And you don't want to be in that place. There's funding that is out there right now. I don't have enough information on it, but I think there's a couple of grants that are being, or loans that small businesses can get here on the island. I will get more information and put that out for you. But it's important that you have these documents. Again, if you haven't done it in the past, no big deal. Just start now. Okay, if you need help setting it up, ask for help to get it set up. And I'm just going to go over a few key concepts here that, again, part of what we're doing today is that you start to understand some of these terms. I hope everybody is sticking in there and don't be afraid of it. There won't be a quiz at the end of this. You'll have the information, but you should, as a business owner, you should really start to understand some of the key concepts that we have that will help you for sustain your business and to grow your business. And also you want to be profitable. So some of the terms that we use that people just are not, they hear it, but do you really know the difference? So revenue, and so you have revenue and profit. The revenue is how much you earn. Profit, I call it profit margin, is how much you have remaining after costs are deducted. That's a real simple concept on that. Cash flow versus profitability. When we're looking at cash flow, when we look at the cash flow, it's the cash that comes in, cash that goes out, what we call inflow and outflow of the business. Profitability represents the income after expenses of the business have been paid. So that's the profit that we're looking at. Again, some of the basics are fixed costs, and we have fixed costs and variable costs. A lot of time when we're trying to forecast and you need to know the difference. Anyway, fixed costs, if you pay rent every month, okay, and let's say you're paying $2,000 a month for your rental space, okay, that is a fixed cost. That doesn't change. There may be an adjustment, when the lease is up. However, that's a fixed cost. It's the same every single month. A variable cost, I love using WAPA. WAPA, depending, my variable cost at home, I decided I was going to run my AC in my bedroom and I ran it pretty cold. Boy, variable costs, my electric bill went through the roof. But I knew that was coming. So, the variable costs are going to change with the level of business. That's going to change with certain charges that are coming through. So it's important that you start to understand those. And the break-even point. What is the break-even point of your company is really, what is the minimum sales volume to cover all my costs? How much do I need to sell to cover all those costs? That's what we call the break-even point. And let's see, the main difference, the video kind of talked about it a little bit, cash and accrual method. It's for keeping your records and doing the proper bookkeeping for yourself. It's important to make a decision. If you're doing a cash, as he said, if we're doing a cash business, cash form of accounting. When someone pays for something, when they buy something, you record the sale and the revenue right at that point. When you pay an expense, at that moment, the day that you pay that bill, and you're paying it and you're recording it right then and there. The accrual method is what most people end up using in business. And that's simply when when the accrual records, the transaction, you're going to record the transactions when they're earned or not incurred, regardless of when you pay the bills made. So what this is saying is simply, I look at somebody makes I sell something to somebody, they pay me with a credit card. Okay, I had the sale, I'm recording the sale. However, that credit card, I'm not getting paid from the credit card company until, it could be a couple of days, a couple of weeks. But when that when that revenue comes back, then I can complete the transaction. Don't let this get you. You're not accountants. I don't think everybody's accountants, and that's where I let the bookkeepers and everybody else worry about this. But you need to know the difference. If you're making a decision, do I want to do cash accounting or do I want to do accrual accounting? As I said, most of the clients that I've worked with said, oh, I'm a cash. And then when we start talking about, oh, they have credit cards and they let people, they put things on accounts receivable, accounts payable, then you become accrual accounting. So I'm going to be going into that more in the next session. Okay, so accounts payable versus accounts receivable. And again, this is important when you're making that, just to understand this, that let's say payables, represents the money that your business owes to a supplier. You go to Home Depot, you pick something up and they charge the company. That is not, if you didn't pay cash and you're going to owe that bill, that's where we call accounts payable in business. Accounts receivable is just pretty much the opposite, represents money owed to your business by the customers. Again, credit card is a great example. We recorded the sale, however, we still do not have the cash yet. That's why it's a delayed system. So in addition, accounts receivable is considered a current asset, and whereas the accounts payable is considered a current liability. Not to worry too much about that. Again, when you get into the more advanced to know this. Okay, so I'm going into the main area here, but I would like to, just as a little teaser, I don't know if everybody is familiar with what we call the beneficial ownership information. When I finish today, I'm going to be actually going through this and showing you. And this is a mandatory reporting that every single business included that's in the territory, that's an LLC, an LLP, or an S Corp, you have to finish and you have to complete this reporting to the government by December 31st. If you, there's some exceptions here, but December 31st, if you haven't done this work, and you can easily get $1,000 a day fine. Okay, it's huge. It's a reporting system. It's under the Financial Crimes Enforcement Networks, and Congress and they put this law into effect. They voted it in about 1.5 years, 2 years ago, and it's here. What they're doing is trying to see if there's illegal money flowing around. So they want every business owner, you're going to report information about your business to the feds, as the federal government, and you're also going to report you as the owner. So it's not optional. You have to do it. So I just wanted to point that out because so many people are still saying they haven't heard about it. They didn't know about that. So I'm just going to look real quick. I see, let me just double check something. Oh, I love this. Thank you. Latasha put in here that the wave accounting is awesome. She really likes that. Thank you. These comments are great. The spreadsheet, yes, you're going to get I will make sure that you have the links when you get, Sharika, when they get the copy of this presentation, are they going to be able to click on that link? Yes, I got the thumbs up. This is fun, everybody. We're normally not in the same office, so I can just scream down there and poor Sharika rolls her eyes at me. So yes, when you get this presentation, everything that I put in there, you should be able to get. The one that you may not get is the cash flow sheet, and that's because that's my sheet. And if you need it, let me know and I'll send it to you. Okay, someone said, can everybody see everything? It's about sharing the screen? Okay. And I'm just going through these quick questions before. Okay, so. Okay, as far with the report, if that's what we're just talking about, the BOI and which is part of the FinCEN, Financial Crimes Enforcement. The question was, do I have to, if you're a sole prop? No, you do not have to. You do not have to be part of that. Again, don't get S Corp and sole proprietor confused. So sole prop does not have to do that beneficial ownership information. Again, it's huge, and we're really trying to get the word out here in the Virgin Islands. So that's why I stopped in the middle of this presentation. If you're a business owner, here's the skinny on it. You have if you were in business prior to December 31st, 2024. So, December 31st, 2023. If you had a business, let's say for 5-6 years, you have until December 31st of 2024 to complete these forms. If you started your business in 2024, anytime in 2024, you are supposed to have completed this BOI within 6 months of your start date. So if you started in January, okay, you're already late for completing these forms. Now, I can answer for the government, but I haven't heard of any kind of fines as people are getting up and running with this. But come after the first of the year, I expect it. So if you started your business in 2024, get in there and get this done. And then we have anybody that starts a business, if you're working at starting a business and you started after on January 1st, 2025, you have 30 days to get this report done. So there we go. I did my PSA, public service announcement about the BOI. Everybody, please just don't, and I have videos. You can go online and you can actually pick up, we did a training session, and I have all kinds of examples on how to finish and how to complete the forms. Go and pick it up. There's several trainings being done. Don't be afraid to give us a call. All right. As we're going through, we're 42 minutes into it, and I think so far, so good. 3 key financial statements. This is what it's all about, everybody. And again, this will be new to some people, and and some people have used these. But these 3 reports, that's the 3-legged stool right here. The income statement. It's also, by the way, if you hear someone say the profit and loss, the income statement and the profit and loss are the same report. I would love to know who in the accounting world decided on 2 different names. They are exactly the same. So don't let that ever confuse you. So that tracks revenues and expenses for a particular amount of time. Now, I'm going to have a few examples here in a minute, simple examples. The balance sheet provides a snapshot of a business assets, liabilities, and the owner's equity. That one gets a little bit more confusing. I actually still, for when I can create my balance sheet, I depend on the accounting software when I'm using QuickBooks. When I use QuickBooks, I can pull and I can actually run the numbers to show me what the balance sheet is. When a financial person, and let's say a lender, is looking at your balance sheet, it's telling them what your assets are, liabilities, and equity. And it really tells the person, it should tell you are you able to pay your bills and how you can pay them? So it's a very important sheet. And then again, the cash flow statement, how much money it moves in and out of the business. So these are all really important. These are the 3 key reports, and especially for the beginning financial. When we get done today, do I expect anybody to be an expert? Absolutely not. Just keep working with them, come see us. We will help you to understand this. And it is, I always say, and it's a very true statement, if I can do it, I guarantee anybody here taking this class should be, this seminar should be able to do it. Again, breakdown of this is what's coming right next. I'm going to show again an income statement, cash flow statement, and a balance sheet, and the purpose of each one of these. And it's important that you have at least an understanding. Do I expect you to be able to work them? Not at this point. Some people can, they've had that experience, but if this is truly new to you, just get the concept, the understanding of what's going on. So when I'm looking at the income statement, it's the first part is I'm looking at revenue, cost of goods sold, gross profit, operating expense, and net income. By the way, I'm going to be showing, I have a simple income statement that's on our next slide. Now, their key ratios, the gross profit margin and net profit margin. Just at this moment, that is a whole seminar in itself, a whole class in itself to work with the key ratios. So I just wanted to mention them here, but I'm looking at when it tells me what's going on. The ratios are important for analyzing your business. But right now it's like, start with the basics, as I call it. This is a very simple income statement because it's showing net revenue. Well, there are if you get a detailed income statement, it's going to show where the different revenues came from. But for this purpose today, it's simply they had 100. And by the way, when I talk, I round the numbers when we're talking this much money. So in this, the net revenue was $112 million, which is 100% of the revenue. The direct costs, what it cost me to operate. And so you as a business, how are you tracking all these direct costs? It breaks it down for you. Or you have to break it down into what the direct costs were to generate that income. In this case, it was 80%. So the gross profit, the gross profit is $22 million, which is 20%. So 100% of the revenue, 80. So this is basically telling me that out of every dollar I took in, 80 cents is going to pay direct cost expenses. And 20% was 20 cents on every dollar was profit. But that's before we have operating costs. Operating costs are separate, sales, marketing. And so we look at all of these in earnings before interest and taxes. They were at 18% and the net profit of 14%. Okay, so one of the things I really want to point out is depending on your industry and what business you are in, for me with the restaurant industry, the average restaurant throughout the country, this net profit is usually between 5 and 6%. So what it's saying is for every dollar I take in, restaurants tend to make only 5 cents on the dollar. So as I'm watching and doing my reports, these percentages tell me a bigger story faster than I can look at all these numbers. And then if I'm looking at last year's, I'm trying to figure out what the difference is. But if I'm looking at last year's percentage and this year's percentage, let's say this year, I come at direct costs at 84%. I can start figuring out why the costs went up 4%. Again, just real simple as we're starting out, percentages tell you a story much faster. Okay, so that is just a sample of the income statement. Again, don't get confused when someone says profit and loss, both the same report. They will look identical, except for the title. Okay. So cash flow statement is the importance of the cash flow. Again, you're operating what you're investing in the financial activities. So I'm going to see if I can pull this up here. Yes. Okay, this is the one I showed you earlier. What is with this particular cash flow, I'm going to be generating what the revenue is. Let's say if I'm selling, I had a client in here earlier, and it's $1,000 for whatever they're selling, and let's say they did 24 units in the month. Let's see if I can pull this across. I've had trouble pulling this across. There we go. So what it's saying is, what I'm doing is saying, I'm going to sell 24 of these units, let's call them bicycles, at $1,000 in January, and we start generating revenue. And we're forecasting, we're coming up with what the revenue would look like. So when we get down here, you see the profit and loss is 24,000. But again, this is not accurate, but I wanted to show you the ending, because of the way the system works and how we report things, the ending cash balance, notice how it's increasing. So according to what I just put in, at the end of year one, we'd have $288,000. Trust me, this works, because the cash flow is one of the most important things, especially for business operations. You should know what your cash flow is, and so that's where the actual numbers, what you're actually running and for your business, and then you have the forecasted numbers, where I want to take it in the future. That's what this sheet really helps us do. What's nice about this sheet is when we do this this is one that we use with all of our clients. What happens is that as we create the cash flow, it automatically is creating the balance sheet and the income statement. We have this all programmed. So it's nice when you're doing a business plan, you have all three reports that the lenders want to see. So again, cash flow is, to me, one of the most important areas. So this sample I have is not one, you saw what we just had. This is from the Harvard Business School, but it breaks it down. So statement of cash flow, it's going to look at your operating activities. So that's the operating section. It's then going to look at your investments. What are you investing? Did you put in money into securities, whatever? So that's the investing section. And then the financial section is, did we pay out dividends? Now, if you remember from the income statement, okay, it only shows this. You see these two sections down here. Again, one of my first lines to everybody was, the business owner comes in, I made money, but how come I can't pay my bills? Usually it's because they just looked at the income statement. They have not looked at what their cash flow is doing and at their balance sheet. So these are important, the three of them. Again, this is new to a lot of people. Do I expect everybody to fully have the picture of it? No, but it's that you're aware of it. All right. Then we have the balance sheet. Okay, the balance sheet, to me, it's one of the, it's a difficult it gets a little difficult when you're trying to put everything into it, because you need current assets and current liabilities and the expenses that go with it. So there's a formula I just want you to remember right now. The formula is assets equals liability and owner's equity. Okay, those two. I'm going to show you an example here in a second. But the best way I can describe this is, again, the balance sheet, you see we have total assets equals 83,402 in this case, and the liability and owner's equity is 83,402. Magically is in balance. When it's out of balance, I have tears in my eyes when we go to search out how it happened, what happened. The best way I would love to describe it, to give you a quick sample, is if anybody owns a house, or if you know anybody that owns a house, let's say the house is the asset. And if the house is worth $300,000, that's the total assets. Now, coming down to the liability side, if I have a loan, a mortgage on the house, and let's say the mortgage is $100,000, that means my owner's equity, the owner has $200,000 in equity in the house. So the $200,000 of their equity plus the $100,000 in the mortgage that's still owed equals 300,000. The house is worth 300,000. Owner's equity and liability is 300,000. They're in balance. That's a real simple way to look at it, but hopefully that helps you to understand what this is all saying, because look at, the assets. It's looking at security, inventory, all of these different things. And this is why when it comes to the balance sheet, if I'm not using, I use QuickBooks a lot of times with my company, and Quicken does the same thing, but not quite as well. But I have kind of graduated to QuickBooks myself because that's the course that I teach. And what we're looking at with this is that you really want to be able to, I turn this over to my accountants and to my bookkeeper. It's one of those reports, I can do it. And I struggle through it. I'll just be very honest. There's, certain things that we like to do, certain things we don't. The balance sheet is one that just absolutely drives me crazy. And so what I decided, I did it several times on my own, but what I finally decided is I'm letting the experts do it. So I pay a little bit extra to have them create this. And then I know it's right. They're backing up what's going on. And let's see. So that's the balance sheet. Those are the three main reports: the balance sheet, the income statement or profit and loss, and the cash flow. If you start looking at all three of these holistically all together, you're going to start getting a vision of what your company is doing, because it's balancing this out. This particular report, I'm looking at my accounts payable, accounts receivable, and I'm looking at what the debt rate, what the debt is on that. How is it looking? Will I be able to pay my bills? And this gives you an overview. The cash flow and the analysis is, what is the cash in the bank? And you saw from the previous slide, it takes into account many different areas. And then the income statement, again, I can't stress enough that bottom percentage. If you have a business and it's, let's say, a retail business of some kind, stop in, see us, and you can go online and look for your industry. What is the average net income percentage in this industry? And you can compare yours to what the industry is doing. Now, again, you have to be smart. We're in the Virgin Islands. Certain expenses are higher. And so the difference, there may be a little bit of a difference. And if you didn't come out exactly to that percentage that they're saying is the industry standard, then what you're going to do is make sure that you have the numbers, is that percentage close? How far away is it? And then you're going to judge, am I in line with the rest of the industry? Again, restaurants, I'm real familiar with the restaurant. You have the restaurant industry, 5 cents of every dollar is all they get in profit. So if you're not controlling your costs, how many times have we seen restaurants go out of business? Because they're just not watching over what's happening. So that percentage is critical that you keep track of that. Okay. We're about an hour in, I think. And so I'm a little bit further ahead, so I have plenty of time for questions and answers, and I can work with the FinCEN. I will probably show that, and I encourage everybody that hasn't done it to watch this. So payroll and employer responsibilities. So many times people will say, oh, yes, I'm going to have employees, or if I'm paying anybody in payroll, remember, you also have responsibilities that you're going to have to take care of. I'm going to go here to my payroll section. So if I'm looking at payroll, and I'm just going to use one example. Let's say if I have one employee that's working 40 hours a week, I'm paying them $25 an hour. Okay, so the wage that I'm paying them is $4,300, okay? But what you have to take into account, that's for the month, is you are responsible. So you're taking out employees' Social Security, FICA, everything else, and you're putting it in a separate bank account. Remember to put it in a separate bank account because that's not your money. You need to pay that. You've taken it away from the employees. You deducted it from their pay. But you also, in many cases, have responsibility to pay what we call the labor burden. Social Security, there's matching. These rates are for Washington State, so I haven't updated them for here in the Virgin Islands. But if you have Medicare at that point, so with the 43,000, you as a business owner may end up paying an additional 500 to cover to cover this for that you're responsible for. That's the owner's responsibility. So anytime that you're going to put in payroll and you're going to hire somebody, make sure you do this analysis on, I know what I'm paying them an hour and how many hours, but on top of that, there are hidden costs that a lot of people just don't realize are there. Okay, so just don't get caught with that one as we go along. If you need more information, I'm happy to share more with you. In creating a budget, know the difference between a forecast and actual numbers. Today we were talking, I talked about this a couple of times. The difference is like this one that I use for forecasting, we do this cash flow and the balance sheet and everything. This is getting prepped to go and do a business plan. So the lender is going to want to see all three of these reports. They're going to want to see the cash flow projections, the balance sheet, what you're projecting, and the income statement. This is all on your projected numbers that you think you're going to do. Okay, this is looking into the crystal ball into the future. Versus you have all three of those reports that we were just talking about, the cash flow statement, the balance sheet, and the income statement. And let's say today is the 14th. Up until the 14th, okay, you have this, all the actual financials to the 14th are you going to most likely get from QuickBooks, from Quicken, or your information in your spreadsheets. Okay, today, the 24th at 11:59 noon is really what this is about. Okay, those are the actual numbers. If I'm working on this next piece, let's say if I want to get a business loan, you're kind of jumping over the wall here and looking into projections. You can use the information that your actual numbers as a guide, but this is taking the forecast, and it's really very interesting to get used to jumping back and forth between these two, on actual reporting and then the forecasted reporting. And also be familiar with internal and external auditing. Internal auditing is independent and assessment of the company's financial information and records, while internal auditing is reviewing the company's operations and process. One of the things I insist on, even with my small business, is that I have, let's say the bookkeeper's doing the books monthly, quarterly, and I had mentioned this earlier, I have an accountant come in and file, all that employee, we were talking about, we collected Social Security and all this. I actually have an accountant file that with whatever agency I have to pay that to, Social Security, wherever that's going. I have the accountant take care of that. I'm still responsible that everything is accurate and it's being done on a timely basis. That's why you as a business owner, you say, oh yeah, I trust the accountant. Well, you better be checking on the accountant. And then because I'm extra cautious when I have my business, the one thing that I really do work on is once at the end of the fiscal year, I'll bring in an independent auditor to check what the bookkeeper did and what the accounting person did, to make sure that everything is in line, because it's very easy. I know many companies got ripped off because they weren't watching their financials and they didn't have honest people in the position. I'm just always going on the cautious side of things. So with that said, it's something that you can look at. And also, if you're hiring if you want to hire a bookkeeper and your accountant and your accountant says, oh, we have a bookkeeping service. This is a personal preference on, or this is a personal opinion. I would stay away from that, because if they're in the same company, are they in cahoots? I'd never want to be in that circumstance. So if I hire a bookkeeper, I make sure that the accountant that I hire to do the quarterly work are not related at all, because I want that independent auditing process to happen. Okay, I'm going to take, are there questions? Let's see. I really appreciate everybody being here. I have a couple of questions. We'll be able to view the video of the presentation at a later date. Yes, you will be able to see that video. Was the live webinar converts? I'm sorry, something's in the way here. Well, oh, that was answered. So as we're going through, I just would like to, when we're doing initial finances as a review, what I'm hoping that you really got today was simply that it is so important that you start, if you don't have a system in place, you put a system in place. And it really is okay if it's just a spiral bound notebook and you start listing your revenue and your expenses. That is a good start. I do encourage, come work with, as I said, the SBDC. We have lots of great advisors here, and we will actually assist you. We won't do it for you. We will train you and we will help you to understand what's going on. That's the beauty of what we do. I've had some people come in and say, oh, you're going to do you're going to do a business plan for us. Nope. We're going to sit here. We're going to help you. We'll hold your hand and we'll get you through the whole process. And it's a full process for that. So understanding where you are is step one in this. The other piece is start to understand these three reports. How do they work together? At first, it's a little confusing. Why am I, what am I looking for in the cash flow? What is it really telling me? What am I looking for in the business? Even the income statement. What is your bottom percentage? Does it fit the industry norm? Are you doing what your industry is supposed to do? As far as if you find that let's say your industry, the average for the bottom line on your income statement is 25% and you're running at 12. What is the reason that there's that gap? Are you controlling your expenses? Are you controlling your revenue, or doing a little bit of both? That you get to be the investigator on what's going on. And of course, the balance sheet, I was just honest, a balance sheet is so important, but I like to have either the QuickBooks or Quicken or the accountant do those for me. Just because the first thing we do when I'm working with a client is when we're looking at, we did the whole cash flow section, and then we go and we hit the balance sheet. The first question is the balance sheet in balance? So that's one of the areas. What I'd like to do, were there any other questions? None so far. And am I still sharing? Yeah. For some reason, my whole screen, something disappeared here. Okay, so, and Sharika, let me know if this comes up. I'm bringing up the website, and I talked about halfway through. Okay, come on. So for those that haven't done the BOI filing, I just want to show you what wouldn't you know? Can't reach this page. I'm going to go back and try this again. I'm going to go into, can you all see the screen? I hope. Let's see, Google.
Yeah.
And I'm just coming in this way. Beneficial ownership reporting. Notice how it's like, you see tech issues, we'll get through it. Okay, this is where you're all going to go if you haven't done this. It's the beneficial ownership information, and how do I file? Do I qualify for an exemption? There are some exemptions, but usually it's the exemptions are the sole props. And let's say if someone owns a bank, because they've already been through all of this. So again, this is coming under Financial Crimes Enforcement Network. It's really important for everybody. And I'm just going to see, would you let me know if we can hear this?
Hello, I am with the U.S. Treasury Department Bureau called the Financial Crimes Enforcement Network, or FinCEN. You may have heard about this new anti-money laundering law, the Corporate Transparency Act, that requires many companies doing business in the United States to report information to the U.S. government about the real people who own or control them. Today I'm going to show you how I would file a beneficial ownership information report. I'm going to start with the website fincen.gov/BOI. On the website, I can see some information that will help me determine if I need to file and what types of information I would need to provide. Let's say I'm an owner of a small business, ABC Inc., that I recently formed with my Secretary of State. I've reviewed the small business resources on FinCEN's website and determined that my company is not exempt from reporting, so I will click here and file a report. The Beneficial Ownership Information Report, and today I'm going to select the option to file online using the web form. In the future, I may need to update or correct the BOI that I filed, so I can do that here by selecting the different options. Since this is my first time filing, I'm going to select Initial Report and then click Next. First, I'm going to enter the name of my company, ABC Inc. I don't have any alternative or DBA names, so I'm going to skip this field and then enter my number here. I formed this company here in the US, so I don't need to select anything here, but I will select the United States in field 10. I filed my paperwork in the state of Virginia, so I'll select Virginia and then enter the address, city, state, and zip. Next, I'll enter information about the company applicant. This is the person that actually filed my company formation information with the Secretary of State. The person that filed for my company is my tax accountant, so I'll be entering information here. I will enter last name, first name, date of birth, and business address. This form also requires the identification type, number, and where the document was issued from, and a picture of the ID. I'll need to provide an image of the ID, so I'm going to click on Choose Folder and select Image and select Open. No other person was involved in the filing of the document that created my company, so I don't need to add any more company applicants. At most, 2 people may be reported as company applicants, and only companies that were created or registered in 2024 or later need to report company applicants. Finally, I'll move to the beneficial owner information part. Since I own this company, I'm going to enter my last name, first name, date of birth, and address. Similar to before, enter the identifying document number and upload an image.
Notice you're doing this twice.
Because I am the only beneficial owner, that's all I have to do here, but if I had more beneficial owners, I would need to go up and click this button, Add a Beneficial Owner. Now that I'm on the last page, I'll enter my email, my first and last name, because I am submitting the report to FinCEN. Now I'll click here to certify that I am filing this beneficial ownership information report on behalf of the reporting company and that the information I provided is true, correct, and complete. And then I will select the CAPTCHA checkbox and prove that I am human. Ready to submit. It will take a few moments for the submission to go through, and now I see the confirmation page. It's important for me to download and save a copy for our records in case you need to refer to them again or if any problems or issues occur. And that completes the filing of the beneficial ownership information report.
Okay, and again, I just wanted to, it looks like I'm impressed. We didn't lose any of the participants during this. So what this is so important because and when you're filing it, I'm hoping that you can get on, I would go and get the copy of the training that I did because this video was there, but I also had two other people that showed you how to fill it out. One is Hector Garcia, and I forgot the other person's name. And they're both really good, but I love Hector Garcia. He goes, this is a hot mess. And he's talking about if they say the paper filing, do the electronic. Everybody I've heard, the electronic filing is just so much better. And the paper filing is, I understand that there's some problems with it. Again, I'm not an expert in that area, but I can't stress enough, and congratulations, every single one of us down here that has a small business, bravo and kudos. So the whole idea is for you to grow your business, you to really feel comfortable growing it, just even starting a business, growing a business. And I do encourage you to look at the SBDC. And again, we don't charge anything for what we're doing. So it's really fun. We make an appointment, we sit down, we talk about it. And I was working with a client today and I said, it's a collaboration. I'm not telling you what to do. And my favorite line is because I grew up in the New York area and I always tell the client, I said, you can look at me and say, John, you're out your mind. And I'm not going to be offended because this is a collaboration of business and watching and finding ways to let you grow. We have some really good successes. I hope this has been helpful. And do we have any questions, Sharika, I need to go through? Let's see. Okay, yes, thank you. You're so efficient. So there's a BOI, VI SBDC BOI webinar. The link has been put in the chat box. And so really do not hesitate. If you feel that, some of this financial information was just a little bit over your head, come in and see us. We'll talk you through it. We'll train you. And it's a lot of fun because once you are, you're that expert, it really is a great, thing for you to watch this grow. I think, and I'm so blessed to be here in the Virgin Islands. I just want to see, and my heart is, let's get small businesses to flourish because you all deserve it. Okay, keep reaching out. Let us know. Any other questions? Okay, Ms. Sharika, is there anything that you would like to? I just dumped this on. By the way, we're all in one office because of an issue, and it's really kind of fun. We're just yelling back and forth at each other. So, okay. Please remember to do the survey at the end. Really would appreciate that. And again, I'm doing the financial, I'll be doing more financials, and we have the advanced financials coming up next week. Thank you all so much. It is just it's just a blessing to be here with all of you. Thanks.